I'm joined today by Orcadian Energy CEO Steve Brown. Orcadian are a North Sea focused oil and gas exploration and development company. Thanks for joining us, Steve.
Always a pleasure, Darren. Always a pleasure.
So, Steve, you put out some significant pieces of news recently, but perhaps before we talk about that, you could give us an overview of the company.
Right. Well, we've really been focused on conceiving development plans as our strategy to make money for shareholders, and we're very focused on that point. But what we've done is we've looked for assets and licensing rounds that have been drilled and appraised by other companies, relinquished because they couldn't see a way forward for the project, but where we see an opportunity. And our strategy has really been to focus on fields with great rocks. So good porosity, good permeability, good net to gross. And we've been looking to innovate around the fluids. So we have a number of viscous oil fields that respond really well to polymer flooding. In the 33rd round, we picked up some gas fields that have actually high inerts contents, so CO2 and nitrogen, and we've innovated around how to develop those. And we've also picked up some shallow gas prospects. And the difficulty with those fluids is because they're shallow, they're low pressure, so you need to think about a different way to develop the field. So really, our whole strategy has been focused in on development projects where all the data has been gathered. You just need to put a great plan together. But we are about to add a new leg to that strategy, and I think it's something that your listeners are going to find very interesting.
Okay. Well, as you say, you've put out quite a bit of news just over the last, I think, week or two. They've been sort of coming like buses, but we'll touch on those. So you announced the acquisition of Halo Offshore UK Ltd and a co-investment with the Independent Power Corporation. What's the rationale behind this?
So the rationale behind this is that we want to make Orcadian a dividend-paying company as quickly as we can. And if we stand back and look at the Orcadian portfolio, the star in our portfolio is the pilot field. We concluded a farm out of that to Ping Petroleum at the end of March. That project is moving ahead, but it's moving ahead slowly because Ping are waiting to see what the post-2030 fiscal regime is going to be. And of course, you're not going to sanction a project until you know what the tax rate's going to be. So it's going to take some time for that to appear. We expect the mists to clear in the spring. Maybe it takes a little longer, but it's going to be a while before Pilot is delivering cash. That's in the longer term. There's a very significant resource base there. It will deliver a lot of cash to us in due course, but it's going to take a while to get there. In the 33rd round, one of the licenses we picked up was, as I alluded to earlier, a license that had a discovery, but it had a high CO2 content. And the concept we had when we applied for that license was that we'd put an offshore power station there and export power rather than export gas. And we'd try and capture all the CO2 and re-inject it back into the reservoir so that that power would be green energy, low carbon energy. One of the announcements we made was that we're going to partner with a firm called the Marine Low Carbon Power Company. They've been working on the concept for this offshore power station for the last 4 years, and we're an absolute natural fit as a partner on Earlham. And the deal we've struck with them involves us retaining a 50% carried interest in the Earlham and Orwell fields, and we're carried to first gas. And that's a project that we think will happen faster than Pilot. So that's medium-term cash flow. But the rationale for the Halo acquisition and bringing in a co-investor is that we want to buy producing assets in the North Sea. You might have noticed there's a few people selling producing assets. You might think it's a rush to the exit. That seems to me like the best time to be a buyer. And the whole purpose in acquiring Halo was firstly that there's some interesting Southern North Sea assets they've been involved in the past, and we're getting access to a whole load of data around that and potentially reapplying for the schooner field. But the entity also has a really interesting fiscal history, and we alluded to that in our results. We noted that Halo has pre-trading capital expenditures of £52.6 million. And actually, that gives us a very interesting tax advantage if we're acquiring producing assets from companies that are paying all the taxes.
Mm.
If they're paying corporation tax, supplementary charge, and EPL, they're the perfect company for us to buy an asset from.
Mm.
So actually, in the near term, we're focused on using that vehicle with the support of Independent Power Company Limited. It's fantastic to have them alongside us in that because it gives us the resources to analyze opportunities and to follow through and make the acquisitions. We're focused on getting a deal done as quickly as we can, but of course, deals take longer than you think. So
Mm.
our intention is to make, firstly, Halo a dividend-paying company,
Okay.
and then with the dividends from Halo to make Orcadian a dividend-paying company. And, you know, that's our near-term cash flow. We got medium-term cash flow from Earlham. We got longer-term cash flow from Pilot. We've completely transformed the story for Orcadian. You know,
Mm.
everyone thinks of us as someone who comes up with development ideas and, you know, finds someone to farm into the deal. We're completely transforming that. We're aiming to make Orcadian first have cash flow and then to pay some of that cash flow out to shareholders.
Okay. And you're also sort of spearheading the viscous oil story a bit, aren't you? Because I see that you announced also that Serica has acquired ParkMead EP Limited.
Yeah.
Um, that's, I think, a viscous oil project. How does this affect Orcadian then and its 50% interest in the Fynn license there?
Yeah, I mean, we're delighted to see Serica come on this
Mm.
license. I mean, we really enjoyed working with ParkMead folk, but Serica is one of the up and coming companies in the North Sea.
Mm.
Uh, um, the purchase of ParkMead EMP shows they're committed to investing in the North Sea. They'll most likely be drilling the Skerryvore prospect. Uh, but you know, they're interested in Fynn. They've capped the consideration that they would have to pay ParkMead if there's a field development plan on Fynn at 90 million. Is it $90 million or 90 million pounds? $90 million. Let's say that. I,
Mm.
I'd have to go back
Yeah,
and look at the RNS to be
yeah,
precise,
yeah.
but it's a big number, right? And the reason it's a big number is it's a very big resource. So
Mm.
the gross recovery we expect from that field is about 290 million barrels.
Okay.
And the way to get that out is with a warm or even a hot polymer flood. We're convinced that that's a recovery method that would recover, you know, nearly 300 million barrels. It would
Is
be
that
as
a
big
similar
as Russia.
method? Yeah, is that a similar method to what Pilot's planning to use?
Yeah. So Pilot's a little different in that the viscosity is not so high in the reservoir, so you don't really need to put heat into the reservoir. Fynn, the oil's that bit thicker,
Right.
and you need to add a bit of heat as well as the polymer flood. But those two things together, you know, it's not rocket science, warming water, is it? Um, uh,
No.
those two things together will give you actually a very good recovery. And, you know, one of the really interesting things about the Fynn discovery is that, and actually, that when we first read this report, it was sort of like, oh God, I'm not sure this is a good thing. Uh, uh, BP actually discovered this nearly half a century ago in
Right.
1975. So the labs in Sunbury did an analysis of the crude in 1977. And they said, you know, the atmospheric residue makes up 88.5% of the mass or the volume, the mass of this, um, uh, the mass of the crude. Sorry, I was
Yeah.
getting interrupted on the phone there.
No, that's all right.
And it's a highly aromatic feedstock, which is of no commercial value.
Yeah.
So, you'd read that report, you think, why on earth are you producing this? Fast forward to
It was 50 years
2024.
late. Yeah. Yeah.
Fast forward to 2024. Anyone who's running a petroleum coke unit in a refinery wants to make anode grade coke that can be made into synthetic graphite that goes into EV batteries. And it turns out that the perfect feedstock for that petroleum coker is a highly aromatic feedstock.
Oh,
And roughly,
okay.
roughly 20% by volume or by mass of the oil could end up in anode grade petroleum coke. So
Right.
it's potentially we see it as a transition fuel or energy or
Mm.
actually product because it's actually a product. It doesn't get combusted. It doesn't go into the atmosphere. A
When you say
big
we,
chunk
do
of
you
it.
mean Serica also?
Well, we haven't spoken to Serica about
Right.
this. So,
Okay.
we, we were surprised by the we knew that something was going on with ParkMead, but we didn't know who with
Mm.
and so on. So,
Mm.
we're looking forward to sitting down with Serica in the new year, laying out, this opportunity and, working out a work program that suits us both to take this project forward.
Yeah.
It's a very big project, and, we like having it in our portfolio because we think the scale of it will attract other players. Um, you know, Serica have indicated they're willing to pay up to $90 million for the 50% share. Um, if I'd probably take that if they offered us that
Yeah.
today.
Yeah. Yeah.
You know, certainly it's good to see that they're enthusiastic about the Fynn project as well as the other
Mm.
parts of ParkMead ENP.
It's interesting on the viscous oil side of things because, in the past, if you've got an oil company that have been drilling for oil and then they've reported that the oil is quite heavy or slightly heavy or viscous, you've seen comments on chat rooms and what have you, like heavy oil, no go, and it puts almost like a dampener on the RNS. But when you
Yeah,
see now the likes of Serica coming in to take on a project of that nature, and then I think there's someone else spearheading in the North Sea, the polymer flood approach. I can't remember the name now, but
yes,
you'll be able to tell me that.
that's
Um,
Ithaca.
yeah, I think yeah. It looks like there's opportunity in this area where perhaps previously people weren't prepared to put in the capex and expenditure for these
Yeah.
type of projects.
I mean, there's a very big opportunity in viscous oil and heavy oil in the
Mm,
North Sea. And we've got our hands in some of the most interesting projects there. Uh,
mm,
we're delighted to have Ping come in and pilot. We also have the Elky field, a 50 odd million recoverable for sure. Could actually be double that if it's appraised. And we have the Finn field, which uh, has this unique characteristic of being an aromatic crude. So the main point about heavy oil is they're not all the same, right?
mm. Right.
So, and actually, one of the things you need to look at is what's the sulfur content in these heavy oils. So the oils in the North Sea tend to have a pretty low sulfur content. If you go to Guyana, those heavy oils have a very high sulfur content, and that does make, puts quite a discount on the crude price
Right.
from those high sulfur heavy oils.
Mm,
But equally well, in Australia there are fields that are very low sulfur heavy oil, and those trade at a very big premium to Brent. So it's not as simple as is it heavy?
mm.
It's actually about what else is in the crude.
Well, it is to your uneducated retail investor.
Right. Okay. Yeah.
But obviously not to the likes of yourself, and that's why it's good to do things like this because there is I think a big misunderstanding, certainly from the retail side and the market in general about heavy oil. So it's nice to hear some explanation around that.
Yeah. Yeah. So, in summary, because I want to be
Mm.
short with this,
Yeah.
um, our focus is actually getting cash flow as soon as possible by leveraging the position we have with Halo to get cash flow coming into Orcadian so that we are around and can enjoy the fruits of the Earlham development in the near term and the pilot development in the medium term.
Yeah, so you did announce something on the a farm out of Earlham and the Orwell licenses. What's the strategy on that one then?
So we've brought in a partner called the Marine Low Carbon Power Company.
Yep.
They have this concept for an offshore power station. Uh, they're busy financing that and lining up customers for the power because it's a unique thing. It's dispatchable, um, low carbon power. You don't get that with a wind farm. In fact, you don't even get it quite as much with a nuclear plant because you tend not to ramp them up and down that quickly.
Mm.
So this is a very interesting and unique source of energy for the grid. And they're going to carry us all the way through to first gas on that project. So,
Okay.
we've got a carried interest, an oil carried interest in Pilot, we've got a gas carried interest in Earlham, and we have a strategy to buy some production and turn Orcadian into a dividend paying company.
Mm. Okay. Well, I was going to say you've got lots of irons in the fire now. I mean, if you wind back, say 6 to 12 months ago, it was all about the pilot and doing a farm out.
Yeah,
And there weren't many thinking you'd actually achieve that. And obviously you have got that now. And that's, I think an 18% interest, circa 18% in that field, free carried. And you think about there's a huge capex, in terms of getting an FSPO for
yeah.
that. That sounds like a not bad deal to me. But obviously, you've got plenty of other cogs turning now. So
Yeah.
what's
See,
your
we've done
strategy?
it again
Yeah,
with the gas field. We've done it again
yeah,
with the gas field. And this time it's a bigger carried interest. And, you know, our focus though is buy some production and enjoy the fruits
yeah.
uh of of that those assets. So
And I guess grow organically, right? I mean, if you line them up and the first train arrives, the second train, the third train, it's allowing you to then put more investment into the
yeah,
projects and grow them organically. What is your
absolutely.
yeah, what's your sort of funding strategy then going forwards? I mean, it sounds with a lot of carried commitments, you don't have too much of a cash need, but are there things you're going to have to, look at and
Uh,
decide how you're going to
so
manage the funding?
yeah, so our strategy is to do deals where we end up with carried interests. And we've done that on Pilot. We've done that on Earlham. We have a bunch of other assets that have relatively low work commitments. Um, there's work we're going to do for our partner on the Earlham field, which we'll be able to bill them for. So that brings some revenue in. There's work we'll do for our partner on looking for acquisitions, where once again, we'll build partner and that will bring some cash in. And, you know, we'll be looking for deal structures that deliver a bit of cash. We prefer to take the cash from our asset base than from the market. But,
Mm,
as a CEO, you never rule anything out because you never do, right?
no.
That's just the
And
rule.
that's why you're a listed company as well.
Yes.
Yeah.
Yeah. But, the market's useless. It's absolutely useless. Uh,
Yeah, it is.
we came to market to get access to capital. We've had no access to capital. We've had to, we've got some capital, but uh, the market is not where I'm looking for the cash. Uh, I've got multiple other strategies in play.
Okay. All right. That sounds good. Well, look, lastly, then, perhaps we can talk about plans for 2025. So we know you've got a few projects in the mix. What will be the key news flow and value drivers for the company and then any investors looking to invest in Orcadian Energy?
So I mean, there's three things that can happen in 20. There's probably more, but three things that immediately come to mind.
Hmm.
So one is us securing um, a deal on a producing asset uh, that's got the right characteristics so that we can take advantage of everything that Halo brings and our partnership with IPC brings. So that's the first thing. The second thing will actually be the clarification on the fiscal terms and the regulatory system that the government's coming out with in spring. That'll set the pace for the pilot project. But then towards the end of the year, we would hope to be making a submission for a field development plan on the Earlham field and the Orwell field.
Okay.
Uh, as that the pathway to take that project forward is actually less dependent on the tax system.
Okay. You mentioned there about the fiscal plan. It seems to many that the Labour government have been doing all they can to try and kill off North Sea oil and gas, if you like, investment. And I think investors are jittery about that. Do you see any light at the end of the tunnel on that, or what's your
Uh,
view on that?
yes, I actually do. And, the end of October was very significant because Labour had, in their manifesto and in early pronouncements since they came into power, they'd signaled they were going to get rid of the 29% uplift to capital spends for the EPL allowance. They'd signaled they were going to increase the rate by 3%. And they'd signaled that they were going to do more things than that. And everyone was expecting something more to make the fiscal system less attractive at the end of October, and they didn't do that. And I
Mm,
think a big reason for that was that they were listening to their own constituency. They were listening to the unions, they were listening to the oil companies, they were listening to companies who want to invest in the UK but are feeling put off by what's happening. They were also looking at companies like Apache just saying, right, we're just packing up and going. And I think they realized they'd gone too far. The way I put it is the UK sector is the wrong side of the Laffer curve. And of course,
mm,
that only means something to you if you know what the Laffer curve is. But the Laffer curve basically says on one axis, on your y-axis, you've got your government revenues from a particular tax, and along the x-axis, you've got the tax rate. So obviously, at 0% tax, you get nothing. And funny enough, at 100% tax, you also get nothing.
yeah,
So there's a curve that goes, like that. There's an optimum figure for the tax where it's too much trouble for people to avoid it or rearrange their
yeah.
affairs so that they don't pay it. And you actually maximize the revenue. We're on the wrong side of that curve. People are thinking how to minimize tax rather than thinking how to produce oil and gas.
Mm, yeah. Well, let's hope things change on that front and there is some light at the
Yes.
end of the
Yeah.
tunnel.
No,
Um,
October, at the end of October, that was a signal to me that the government's listening. They've seen that actually they've gone a bit too far, and now it's just how do they unwind from that position?
I think probably there is also this having a manifesto to win an election, to punish all these dirty oil and gas companies in the North Sea, when in fact they know behind the scenes that that's impractical and that would be actually devastating to the UK
Yeah.
economy and our own energy security. And perhaps always knew they could walk away from, a harsher line, and they would have to do it.
I think, yeah, maybe, but also
Mm.
when you're in power, things are different from when you're in opposition.
Yeah.
Because in opposition, you never have to make a compromise. You can object to everything or you can propose everything. You never have to make the compromises. When you're in power, you have to make the compromises. You have to say, actually, long term, I don't want oil and gas, but by God, I need it now. So I think they're coming to terms with the realities of being in power.
Yeah. Okay, well, it's been great talking to you today, Steve, and thanks for joining me. And hopefully, we can chat again in the near future.
Jolly good. Very nice to see you, Darren.